Hello, fellow traders. 'Tis I, the Rumpled One. It's Friday, January the 4th, the year 2019. Let's talk trading. Weekly wrap up. Okay, we've already seen this week, this year, this month, how you have to have good, great, stellar money and risk management because of things that can happen that are possible but have a very low probability of happening, but they do happen. And when they do, you want to make sure you have your money and risk management in place so it's not too big of a blow when you sustain a loss. Okay, so we've got the year-to-date analyzed chart sitting here. And from the yearly open, we're down 187 pips. Price is making its way back up. You can see we're 502 pips off that low. We're 112 pips off the daily low. So if we switch here, look at a daily chart, you can see pretty much recovered all of this. So the question is, will we turn positive this year for the euro yen? We're just going to have to wait and see, right? Once again, we're going to take that yearly crossover when it happens, the yearly open crossover, and we're going to look to see if it can make a new high and continue upwards and just ride that trade. We can do that with other pairs too. We can take a quick peek here at the dollar yen. We can look at dollar Canadian. You can see here it's put in quite a low. New Zealand dollar. You can see here it crossed above on the very first day, hit a low, but just in the last hour, it's crossed that yearly open. So anybody trading this pair, New Zealand US dollar, it's profitable. Let's take a see if the Australian US dollar did something similar. Yes, it did. They usually do. So here we had a cross, then a slight pullback, and then a nice buy zone trade off that yearly open. Let's see, let's just take a quick look at the euro, as people trade the euro a lot. You can see here we crossed above and below yearly open, trying to make a comeback here. And let's look at the pound dollar on this chart. And once again, you can see here, it made a cross back and forth in the positive, 12 pips above yearly open. Now, let's see. Is there any other pair of note? Maybe the US Swiss franc, one of the majors. You can see here we crossed above and we're staying above. So that pretty much, we went through a few pairs there off of this chart. Now we look at the weekly chart. Once again, all gaps filled this week. We exploded out of that lower wick zone of the previous week. Lots of pips to be had. Once again, looking at the first day of the month chart, you can see we got the first day of the week right here, and the first day of the week, or first day of the year and the month, which in January is going to be the same. So we can scan through the other pairs. You can see here dollar yen's pretty similar. USD franc. Look what happened here. Here was the high of the first day of the week. You see what happened. We went through it once, twice, 3 times, and actually three times just today alone. So trading the first day of the week high, in other words, the first day of the week is the opening range for the week, and just trading out of that extreme. Dollar Canadian, you can see what happened here. First day of the month and year, right out the bottom. New Zealand US dollar, you can see first day of the week, first day of the month, went right through both, northward. You can look at now pound dollar is different. You can see here, we haven't crossed over either the first day of the month or first day of the week's high, but we did cross above the open. That's why we're looking for the opens. And we also can trade the highs. But what we really want to do is jump in at the open. Basically, put a buy zone, let it get up. And you could take the open anywhere within, I would say, 5 to 10 pips of the open going long should prove profitable. Not a hairy hindsight at all. Just for the fun, let's look at the beast. And let's look at the new beast. You can see here, crossing above and below that open. And once again, if you just trade with the candle color, for the most part, you'll be able to grab some pips. Maybe sometimes you'll have to scratch a trade, like right there. That would have been pretty much a scratch trade. Or if you stayed in it, because your stop loss would have probably been somewhere maybe just below here. You can see it didn't even test that stop. So there you had it here. That should have been a scratch trade. Here, another scratch trade because it just barely broke. And then here, that would have been a nice trade here. And you should have taken profit no less than there. If not, you see here, once again, just playing off the wicks. You see right here, it exited this wick zone, touched this wick zone. So you see these wicks, when it starts going back and starts breaking through those lows, it's time to get out, take your profit, because you'll get another opportunity. Happens all the time. Okay, looking here at Euro USD, you can see breaking of the first day of the week's low. Proved to be profitable. Okay, Australian dollar. You can see here, first day of the week, first day of the month low, and then we came back through the opens and through the highs for the month and the week. And my friend, who unfortunately was on the wrong side of this, you can see here it's coming back to the yearly, monthly open right there. And once again, just looking at the first day for each month. And this has and we're just going to roll through. So next month will be 2019-02, whatever the first trading day is, and that will be 01 because it's a Friday. And I need you traders who watch these videos, let me know what you think about these new charts that I've posted. Here's first trading day of the month, the highs and the lows. You can see we're getting back. We crossed back above the low of the first trading day of the month right here. And the inside bars, okay, we have pound New Zealand. You can see here we had an inside bar, so we'll be looking to take the trade on the inside bar, high and low, and on the dollar franc yesterday. You see small breakout there, then it came back, should have scratched that trade or maybe taken a small loss as it exits the wick zone of the previous day. So once again, we're applying the wick zones to these trades for entry and take profits and or stops. So that's another way. A lot of people want to know when to take profit, where do I place my stops? So we're just basically using the wick zones to show price action. And by doing so, you can see here that you take that trade long, you have a nice tight stop based on price action. I mean, normally you might say, well, if this is the high and this is the low, I'll put my stop here. Well, no, you can save yourself a lot of pain by saying if price comes back through here, chances are, that trade's just not going your way. Because if it turns around and hits this again, then you can get back into trade and hopefully you can gain that and even more. So that's how you trade that. Just using the wick zones to delineate your entry and your exit. And they're tight stops. And we've got pound New Zealand right here, the new beast. You can see we didn't trigger either one of these. Okay, and we just looked at this. Now let's see the weekly. We got the euro. You can see here the daily inside bar. There was a trade, should have taken the profit. So we can see the inside, the weekly, and the monthly. Last time we had inside bars. So these levels are still valid. So let's just blast through the rest of the charts here because you've seen them before. The range, still a lot of range on these pairs. A lot of activity the first week of the year, first week of January. And the highest open and lowest open, you see H1. So there will be your short opportunity. And here were your buy opportunities off the lowest open. Buy zone and the pivots. See here we got a missed pivot down below. We have a missed pivot up above. Rats. Okay, new rat zone established. So at the moment, look to go short at 23.48 or somewhere in this 20 pip red rat zone. Pivots, we just saw what happened. We've missed the pivot 2 days in a row. You can see here, 2 days in a row, missed pivots. These are from last year. You can see lots of buying. 2 ball at the bottom, green at the line. Now, what you could do is you can see here, it's starting to penetrate those wicks. You could always jump in here. That's another way of using the wicks. It's like, hey, it's getting in that wick zone, because if you jump in here, you see that's pretty close. So if it comes back here, once again, it'd be a very tight stop, which is one way to trade with tight stops, so you don't lose much, but you have a lot to gain. Here we've got a wick zone, in and out, in and out. And looking here at my favorite, you can see here Larry live trade triggering because of the movement. Can't really see much here, just kind of crossing back and forth. And I think I need to reset that. So that's it, fellow traders. That's the weekly wrap up. I hope you all are still with me this year. And if you like this, hit the like button, subscribe, and just always keep in mind, it's not what you trade, it's how you trade it. So enjoy your weekend and come back next week to drain the banks.